we've always been really focused on investing into that real steady flow of world-class research that's coming out of our UK universities. And we support those businesses all the way from accelerator through to later stage funding. With an influx of potential additional capital at every single one of those stages, we can really see an extraordinary opportunity for these businesses to now be able to scale and succeed.
Hello, you're watching Proactive. I'm joined by Susie Harris, Director of Business Development at Parkwalk Advisors, the fund management business of IP Group. Susie, very good to speak with you. Looking back at yesterday's autumn budget statement, how will doubling the funding cap for knowledge-intensive companies from £20 million to £40 million change the growth trajectory of your portfolio companies?
Thanks, Stephen, for having us. It's really positive. Obviously, selfishly, as the most active investor into UK university spin-outs, Parkwalk always very much welcome any improvement to the funding environment for UK growth businesses. The current limits have been in place since 2016, so they've been considerably eroded by inflation, wage growth, and over the same period, funding requirements for startups have increased by a fair amount, and particularly that is the case for deep tech businesses. So companies are now requiring well in excess of £20 million of funding to get to the point where they are generating revenue, let alone achieving profitability. So as an example, our most recent report in conjunction with Beauhurst, which covered equity investment into university spin-outs, showed that while hundreds of university spin-outs are able to successfully raise up to £20 million of funding, the number who are then able to raise funding beyond that point really drops off a cliff. So that's essentially creating a pretty significant gap between startup and scale-up funding. Obviously, for a tax incentivized investor, it's much easier to absorb the increased risk of investing into pre-revenue businesses. But that's a very different proposition for later stage institutional investors. The very definition of scaling up a business is expanding a company's outputs, expanding its revenues, expanding its customer base. And the funding gap has really meant that up until now, we've actually been asking later stage institutional investors to continue funding the startup journey rather than actually really scaling up those businesses. So in turn, that's meant that the UK has become a bit of an incubator economy where we develop world-class ideas, but then many of those are acquired before the businesses really have an opportunity to scale up within the UK. So that doubling of limits is really a pretty significant change, and it will massively benefit our portfolio. It will allow us to continue to support them much further along their growth journey, hopefully then presenting a much more compelling, potentially more appropriate proposition for later stage investors, and then hopefully bridging that gap to scale up investment.
Susie, what practical impacts do you expect from the changes at the British Business Bank, the Business Growth Partnership, and the National Wealth Fund on early stage deep tech investments?
So I would also add UK Research and Innovation to that grouping. They're all entities that are focused on using government money to really catalyse additional investment into UK businesses. And they should work holistically together across the growth curve to really turbocharge the UK's world-leading deep tech sector all the way through startup through to scale up. So UK Research and Innovation will drive that early stage financing. The British Business Bank's increased mandate and permanent financial capacity should then boost investment from startup through to scale up via the British Growth Partnership. So the BGP is then aiming to drive hundreds of millions of pounds from UK pension funds and other institutional investors into the sector alongside that government cornerstone investment. And then finally, you've got the National Wealth Fund as a real sovereign wealth fund supporting the very best of those companies and really giving them optionality on how and where they commercialise. So all of that should hopefully boost private capital invested into the sector by many times at every single stage, allowing the UK to move from that incubator economy to a scale-up economy.
How do the Mansion House reform supports the financing path for companies backed by Parkwalk, particularly as they scale towards later stage rounds?
So pretty significant capital is required at those later stages to enable deep tech companies to establish themselves as global businesses rather than acquisition opportunities, and to really help keep their centre of gravity within the UK. Pension funds as really long-term patient capital are very well suited to provide that quantum of investment required to create, for example, the next DeepMind or Illuminas. And with that startup to scale up gap being bridged by the increased investment limits for EIS and VCT, later stage pension fund investment can then be focused really on scaling up the best of those UK tech businesses, powering that UK growth engine, whilst also hopefully securing improved long-term financial outcomes for pension scheme members.
Overall, Susie, how do these combined policy changes strengthen the UK financial ecosystem, and what opportunities do they create for Parkwalk and IP Group over the next few years?
So looking at all of those changes in combination, you're really starting to see a cohesive growth journey for those groundbreaking tech businesses born in the UK, and all of it underpinned by government support at every single stage. With government funding and private capital combining at every single step, we can really drive UK national economic growth. We can safeguard our technological sovereignty and really ensure that our most promising businesses go on to become global competitors. For IP Group and Parkwalk, we've always been really focused on investing into that real steady flow of world-class research that's coming out of our UK universities. And we support those businesses all the way from accelerator through to later stage funding. With an influx of potential additional capital at every single one of those stages, we can really see an extraordinary opportunity for these businesses to now be able to scale and succeed. At the moment, there are way more opportunities than there is capital. And if we can really fix that, then the broader benefits are absolutely huge. Financial returns, job creation, technological advancement, and potentially a thriving technology-led UK economy.
Susie, thank you very much for your insights. Great speaking with you today.
Thanks very much, Stephen.
Susie Harris is Director of Business Development at Parkwalk Advisors.